He's saying, I have 10 lakhs to invest for 9 to 10 months with high risk return. Please tell me the 2-3 shares, not mutual funds. Sir, share to batayenge nahi. First of all that. I want to come to the thought behind the query. Invest with a horizon of 9 to 10 months with high risk, high return.
So I have no idea for 9 to 10 months, guys. I'm telling you. No, I'm all about 10 years.
Is this the worst idea for investors right now?
No, it's not. See, there are million guys, there are million ways of making money. The beauty of the markets are like that. You know, if there are million guys, actually there are million ways of making money. You have found your way of making money, you don't have to bother about jokers like us. You know, so because I have my way of making money. I am at peace. I run a company and I invest. I enjoy investing. So since I have made from zero, I can also be I can be extremely patient guy. You know, I can see a lot of adversity. I have seen a lot of adversity. I have seen 67%, 67% correction in the market in my portfolios. So it doesn't, I mean, the downside, so long the story of the company is right, it doesn't hurt me. It doesn't pain me. It doesn't take my sleep away. No. I am pretty peaceful. But is that the kind of temperament everybody has? Obviously not. You know, so you have to see your temperament and what works for you and how you have been able to in market. It's not that today is day one. So if you are there for 5-10 years, you must have found your way of making money. Just stay with that and keep making money.
If you have actually made money, if it's worked for you. That is the important part. No,
I think in India, there is, I can challenge. In last 5 years back, if anybody has come, if he has not made money, I need to get, and if he has invested, he's not speculated, of course, almost 90% would have lost money. But if he has invested purely, he would have made money, maybe not 20%, 30%, but 10, 12, better than fixed income, he would have definitely made.
I want to ask you a question very, candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Raamdeo Agrawal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became an issue, you know, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay, and can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence, the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that?
Yeah, and market had already corrected. So what is there to bother?
There's 2 questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part, you've already answered this, but how does retail approach this? Typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation or still continue and have that faith in the markets and still keep on investing?
I don't know. So many questions are there. Which one to? So I'll tell you. See, market is going through a structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. come 2020 and instead of 300,000 customers, we are getting as a system 3 million customers, 10x. And till last month we got it. Okay, so this is structural shift of the Indian market. So DI flow is staggering and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down. But if you look at say 5 years henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CIO or somebody that please open we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI in a very sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahi is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces. Most of them positive, except for FI is going out.
But have you observed active retail investor participation coming down? There was NSE data that shows active retail participation has come down in the last year.
I can tell you we run one of the largest broking,
exactly.
active broking that too, with a 98% pin codes all over the country. My March revenue from broking only is 37% higher than last year's March.
What are you saying?
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.